Good morning, traders. This is Wilkey with StartupTrading.com. It is 8:48 a.m. Eastern Time on Monday, June 22nd, 2020. So looking back at Friday's session, which was quadruple witching, by the way, and this is just until the 4:15 close. There was a couple other candles, two more candles on the 15-minute. After that, between 4:30 and 5 o'clock Eastern Time, I usually don't pay too much attention to them or capture them each day. But regardless, so for each of the indexes, the solid blue line and where the gray box starts is where the overnight ends and the opening bell begins. So you can see that coming into quadruple witching, remember what's happening on quadruple witching is the futures for the equity indexes are expiring just before the opening bell on Friday. It's a weird time that they do that. So what's happening, and we'll look at it here in a second, but just a brief summary is anyone who is still in that, and whether they're large institutions, just because they're a large institution doesn't mean that they're smart money. That's a misnomer. So as they come into options expiration, anyone who's still holding the the June contract, it hasn't rolled over to September yet, right? Their time is ticking out. The contract expires at the opening bell or just before it. So what happens all night long? It's just like a slow bleed short squeeze. We have a little bit of consolidation coming into 9:15, and then we'll get a 10-point run up right into the opening bell as the contract expires. What happens when the opening bell rings, right? All that fervor and that short squeeze is now over, right? So the down. So that happened on most of the indexes, and most of the indexes was just a bleed off the rest of the day. We'll get into some other technical analysis, but look at it. And then if we also look at where a lot of the range was, so it looks like an engulfing candles, right, on all these going through the previous day's range, which it was in reality, but I don't put as much weight on to it on quad witch. So getting out of order here a little bit, I think. So looking at what's going on this week, we've got existing home sales at 10 o'clock, flash manufacturing Tuesday. So really not a lot of news. We'll get into some other news tomorrow, but tomorrow, not much. And there's really not much on the deck for news this week. I put in all the U.S. news that I felt was slightly relevant on the chart or on the label this week, just because we're pretty much, earnings season is over. If we look at, who's earning this week, I mean, Nike's probably the biggest name besides, Paychecks. And we'll, see what goes on from there. But with not a lot of news going on between earnings, the futures, and, just rolled over to their new contract, it's ripe for play. Let's put it that way. So as we look at just where we've been, and again, I say that you should look at this chart and think about what's going on for at least 30 seconds a day. If you're not doing that, you're doing a disservice to yourself. If you're not just looking at one day bell-to-bell candles with the extended session turned off to see, what the range has been doing. Has it been contracting? Has it been expanding? Are we moving up? Are we moving down? What's the bigger picture on the time frames? Because as day traders, right, we're trying to figure out, how we can, get some points out of whatever is happening today, or maybe swing for a couple days at the most. But we need to be aware of the bigger picture and what's going on, so we can try to pick the right direction to scalp with, right? So this is where I think the script flipped for the from the bears out of this fall to the bulls, right? This is where I think they took over, and that was right around April 8th, April 9th. So as they've taken over and they've come up here, you can see how big the candles were, right? Lots of range, lots of range, lots of range. You start seeing range contract. Once in a while, we'll get a bigger range day, but there's only two, outs, maybe three, with that one to the upside, of really large ranges to the upside all the way until we hit this top up here right around 32.20. As we come back down, right after we had this island reversal, we got 4 days up here, we island reversed on them. We left them up there in the dust with their holding the bag with all the longs. you can see range expansion, right? You can see how much bigger this bar is. We can see the next day, nice range, nice range. We pop back up, get a little bit more complacent, right? A little smaller range, but still bigger than what we've had. Smaller range, and then Friday on the quadruple witching, right? We're, here. And I've said all along that once we got above basically 3,000, you can see the shelf here, that there's really no significant resistance until you get up to about 3,300. So we can just, waffle back and forth in this. And what happens if we get back into here? We could go down to 29.35. We can go down to 28.43, right? We can start taking back of this. Remember, as far as large gaps go, there is still a large gap below us, basically between the 15th and the 18th of May. So keep that in mind if things do get out of hand to the downside. But to be honest with you, I don't think the bulls really lose control of this market at all unless we start, aggressively printing below these lows that go back to the 9th. So you would have to get below 27.30 and start holding before I think we have a chance to take out these new lows. And you can say, well, obviously we have to take out that low if we're going to take out that low. But until then, I think you still want to favor the long side. They're not saying there's not days that we're going to be scalping short and looking at scalping short, but you just have to be aware of what's going on in the bigger picture. And the first line in the sand is going to be right around 3,000. So with that said, sorry about that. Let's look and see what's happened overnight. And as we look at what's happened overnight, again, this was that Friday squeeze up. I just was reiterating that again. If we look at the whole session, right, hardly could get any lower lows, right? They're all just squeezing up, and that contract expired, and just is a bleed back all day. And then you can see where we closed Friday, right? This is where the stock market closed up here, basically at 30.84, which ironically we're not trading too far from, right? We're trading 30.80.50, so we're trading only 4 points below where the stock market closed on Friday. So then we had some more quadruple witching shenanigans, in my opinion. They just ran this down. So basically, most of this run in this candle was also from 359 on. So as you went from 359 to basically 4:15 Eastern time, that's where most of this came in 16 minutes, which I tend to think is just total crap and manipulation, but that's the game that's played on quadruple witching. That's why a lot of professionals, day traders, just stay at home that day or go something. They do something else besides trade. So as you come across here, right, this is where futures, the session ends on Friday. We get this gap down, right? Everyone thinks we're going to, we're going back to 1,000. No, I'm just kidding. We're going lower, right? So this low was made 9 minutes into the session. And if you look at what's happened since then, it's hard to get lower lows since coming out of this 30.27 quarter and going on. So what I want to look at now is setting up for this week. And I talked about this last Friday as well. I said, don't get too excited. Oops, turned off the wrong one. So I said, don't get too excited as you're sitting here looking at, last Tuesday. If we look at it, this is Tuesday right here, the high and the low, basically from 31.57-ish down to 30.64. We never got out of Tuesday's range the rest of the week until the last couple minutes, of futures closing. The stock market never saw anything out of there. So I said, that was one of my comments Friday, don't get too excited about the upside until we can break Tuesday's range. Otherwise, it's eh. So as we come across here, there's two draws that I'm really watching right now. So if I look at from the high of 32.20.50 on the September contract down to 29.23.75, we basically held this 78.6, within a few ticks. right? That's 31.57. Our high was 56 quarters. So that's 3 ticks away. That was the high. So this draw, to me, is still not dead. So for the shorts, that first target down, if this draw were to complete, is at 28.53.75. The other thing I'm watching is just, what's happened most recently since, September started trading. So, just going from this low of 29.23.75 up to the high of 56 quarter, right? I want to watch the longs in the, to see if they can hold the draw. So I'm going to extend this draw out first. And as I extend that draw out and we look at, basically the action last night, and this might be a little bit hard for you guys to see, but basically 40 was the 50 of that. We, basically opened at 40, drove down, and then crossed above it, and we never looked back across that again. And then we got back up to we had underwater closes. This is what the blue is, and here we've traded back against the water, above the water. So the water is a capitulation signal, and it usually means that the next session you're going to close above that high, which is going to be basically 30.71.5, I think is the previous day's high. We'll check that out. So anyways, that's what's going on for the longs. So as long as the longs, say that a couple times quick, hold 30.12.50, they think that they're right and all the buying that they've done overnight. So now let's back this off. Let's remove or, take the extension off on that draw. And let's extend the short sequence and see how reactive we think it's being or not being. So as we look going across, right, we can see that in the overnight session, it doesn't seem as much in play as the long draw. So I'll leave it there. So I think the long draw is still the one to watch, not the short draw. And I'm going to make this quick because I'm already running late. So I'm going to leave the short draw there, but I'm going to extend the long draw, and we'll watch it until we get under 30.12.5. I'm not going to be too concerned about what's going on. So basically between 30.12.5 and 31.07, both sides still think they're right. So we're likely to chop between 30.12 and 31.07 until there's a decision that's made. The other thing I want to share with you real quick before I go, and we'll make this quick, I'll just go over the 4 indexes themselves here in a second. But we had a split distribution on Friday, and this is the other important thing to leave with you. So, and if we get over 31.15, right, that gets up into the upper distribution. So basically, for the ES, between 31.05 and 31.15 is no man's land. So just trading up to 31.05 is really no big deal, believe it or not, for what's going on recently. It's just status quo, staying in this lower distribution. Going through this 10-point range and starting to hold 31.15, right, that's going to change the game. That should bring in a lot more squeezes. That'll be the bulls' day to lose at that point in time. And if it goes back down under 31.05 at that point, and then back under 30.93, the bulls, really don't have as much going on as they should. And for the NASDAQ, that's going to be 10,023 quarter to 10,050. So looking back at all the indexes real quick so I can get off of here for Jack. So underwater closes on everything except for the NASDAQ, but it did trade underwater, and they're all above the water coming into the bell. So, you have to go with the longs are in control. They've been in control all night. Just remember that the overnight session highs have been hard to get over as of late. So I think if we start printing over the overnight high and start holding it during the bell, that'll also be a sign that maybe some lows are in. And we'll have to see if we get over those short squeezes and up into that upper distribution. I hope this helps. You guys have a great day, and I will talk to you tomorrow.